All right. Good evening, traders. Good evening, everyone. So, welcome to this meeting. First of all, I have about an hour for this meeting, right? So, but I want to quickly know the bulk of the majority of my audience, whether you are new to trading or you have been trading for a while. So, by trading for a while, I mean you have some knowledge about trading before now. So, let's do a quick vote. If you are new to trading, all right, give me a 1. If you have some experience, some knowledge, even if it's what is Forex that you know, but at least you know what trading is about, give me a 2. So let's do a quick vote. A 1 if you are new, a 2 if you have some experience. Very important. So I will know the bulk of our audience. Okay. I can see 2s. Ensure you are counted. Ensure, because we'll be interacting with the chat section a whole lot. Your questions will come here, and I will know if you are following from time to time. Okay, I've seen 1, Shidi Zeng. The rest 2s, 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 2s. All right. So I think the bulk majority of persons here are in the 2 category, and that's great. All right. I think when we get to 100, cannot take more than 100 capacity. All right, 2s, 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 2s. Good. So the person, or if you're just joining, you're watching the replay and you are new, it's like a new, you are learning to know what Forex is for the first time. All right. After this meeting, reach out to me. I'll give you a PDF that will give you some foundational stuff about trading. All right. So reach out to me. I'll do that for you. All right. Now, so the concept we want to learn in this meeting is a very simple concept, smart money concept, liquidity and structure. Liquidity and structure. All right. And it's a very simple model. Now, before I go into that, remember I give a disclaimer at the beginning. I said, if after this call, it looked too simple for you, all right, God has really blessed you. If it sounds simple for you, that means you understand the concept. That means you have a good understanding. And I won't blow my trumpet, all right, but let's just flow together. You will ask question. Now, before we go into TA or technical analysis, I'm going to leave a PDF with us. I did that when this group was created, I think some 2-3 weeks ago, for those guys who were there earlier. Earlier today, I was going through that material again. I am going to recommend, sorry if I'm going to go too fast, just try to follow. I'm going to recommend 2 material for everyone. Those of you in the 2 category, I'll recommend 2 material for you. I'll recommend, what's this man's name now? Trading in the Zone, a PDF or a book by Mark Douglas. Trading in the Zone by Mark Douglas, and Best Losers Win by Tom Hoggard. So Best Losers Win by Tom Hoggard and Trading in the Zone by Mark Douglas. So what I'm going to do, I will recommend you get the hard or physical copy. If you can, now the capacity is full, or if you exit the room, you may not come in again because we can only take 100 persons. So please ensure you keep your place. Those that will come late will not be in this call. Not my fault. So I'll recommend any of. Okay, let me type them. Let me type it on the chat. Or okay, no, I'll put it on the WhatsApp. Put it on the WhatsApp. The 2 materials. Number 1, Trading in the Zone by Mark Douglas. Number 2, Best Losers Win by Tom Hoggard. Now you can check any of them on the YouTube, or you can help yourself by going to what's it called now, ChatGPT, and ask them to summarize the book for you, or go to YouTube, watch the. We do have the audio play of the Trading in the Zone, but I recommend you get the book. If you can go to any good bookshop and get these books, and I'll tell you why. Because technical analysis that I want to do for the next couple of minutes will not take 30 minutes. Sorry, will not take 20 minutes, in fact, to explain how to trade A to Z. And I'm not even joking. I've done boot camps and I have enough experience to tell you that. But you see, the reason people fail in trading, and allow me to use 10 minutes to handle this session, is because primarily they come into this business with the wrong mentality. Most of you, or every one of us, we are guilty of this. most of us, or every one of us, we are here to make the money. So we come here because we are lured by the miles wristwatch, the Lamborghinis, the fast cars, the flamboyant life. I have my own experience, right? Of just push a little bit of just click, buy, sell, you made money. Like for example, I made money today trading Derive without leaving my house. I went to church, did other stuff, made money. Okay. But then the other side, which is also true about trading, is what most people are not, they don't want to appreciate the fact that trading, it's a it's a business or is a model that is designed to give you wins and losses. All right. Now you must be comfortable with the losses, or you must learn to win even when you lose. Hence, that material, Best Losers Win. If you read that PDF, if you have been trading for at least 1 year or 3 months, no matter your duration, your mind will shift. All right. Because why traders? Now, go check the track record of trading. Most of you are Nigerians. You saw when one of these guys, a popular celebrity guy, was saying last year, 2024, he lost about 3.4 million naira or dollar, I cannot recall, to trading. And people were thinking he's just bluffing. No, people lose life-changing money. Okay, and we don't have time to go into your experience. Some persons have used money they could have used to marry, to live life, to put in trading. Some persons have been indebted. Now, it's not enough to sit here with you and talk about the pain, the dark side, because many people want to shy away from it. But hey, let's face reality. I'm one of those guys that if you're in my other team, in our mentorship team, when we take loss, it's everywhere. You see it. So there is nothing, zero, nothing to hide about or to be shy about. All right. Now, I said this, let me, I don't want to spend more time here. The reason why the majority of traders don't succeed in this business is because they come with a wrong mentality. And I say this with every sense of respect, every sense of acknowledgement. Now, one of the things you will learn from these materials I recommend, which by the way, I'm not going into them, but I recommend, if after this call, the first thing you do, you take next week out to study one or both of these material, and that's all you could do for this first quarter of 2025, it will change your life. And now you will now start seeing that those losses, they are actually lessons. You will now start seeing that. Let me give you some tips before we move on. Trading is designed in such a way that if you are not disciplined, you can never make it alive. Not just as a discipline as a person, you must be disciplined as a trader. Discipline in the sense that you have to, because the business is so simple, it has a low entry barrier. You just register, like I gave you guys Okta FS link, register, deposit your account. You see buy or sell, click buy or sell. Somebody told me make $300, another person made $60, and then you think, no. Because it has a low entry barrier, that means you have to do something the bulk majority of traders are not doing for you to be outstanding. So usually things that are very easy to start, like pure water business, those of you in Nigeria, you know what I mean, like water business or just mention any maniac job, any and everybody can do. You will see that to be outstanding in those things, you have to have certain level of discipline. You have to have certain level of character. And that is what trading in the zone will show you. That first of all, one of the things I learned from trading in the zone is that the market is neutral, 100% zero base. This is gold chart now. It's going up. This past week, gold bought. Some weeks ago, some months back, it sold. So people sold, people bought. So people that were selling and made money, people that are buying and made money. All right. So the market is neutral. It's not witch hunting anybody. Okay. But you have to see it from that perspective, number one, and believe it so. Then number two, you have to see the market, like I learned from that trading in the zone, that the market is like a coin of two sides, heads and tail. Head meaning win, tail meaning loss. And there is no way you are not going to experience both sides of the coin so long as you keep flipping the coin. So, those of you that know mathematics, if you are holding a coin that has two sides, head and tail, and you want to flip that coin 10 times like they do to start a football match, what is the probability that if you flip that coin 10 times, it will all appear to be head? that you're flipping it 10 times, all 10 will be head. What's the probability of that? Zero. Impossible. Or zero in probability language. Now, what is the probability that if you flip it 10 times, you will get a tail? That is the other side of the coin. Zero. But what is the probability that at a constant, that this one is constant, that if you flip the coin 10 times, you are either going to get a head or a tail? That probability is 1, absolute or 100%. So that means win or loss, win and loss, they are cohabiting together and they must appear like the coin that you chose. So 100% win strategy is a fallacy, it's a fable, or I could say Nigeria, it's fabu. I have been trading for 5 years, 2 years, I've been trading for 6 months, zero loss, all right? Or I have a strategy, I should say, because some person can say, I'm trading for 6 months, zero loss. Maybe you're just taking one trade. Yes, you can be a swing trader for 6 months, just one trade, and that trade is in profit. I can say 6 months I've traded, no loss. Well, but you understand the context I'm coming from. The point is that the no loss strategy does not exist. It's an absolute fallacy. And the sooner you come in terms with it, the better for you. But you see the problem is not what I said. The problem is that we as humans, we are wired to operate in such a way that if something is not certain, if it's not sure, why will I invest my emotion? So in school, when you fail, you get 3/10, you are beating that is poor result. You get 4/10, that is poor result. You get 9/10, excellent. 10/10, excellent, right? So we have been programmed in life to negate or to be against things that fail. So traders come into the market with that mindset. Unless this thing is certain, I will not take it. Now, they now do all the parameters, all the Bollinger Band, all the support resistance, and now come to a point, okay, this is going to happen. This is going to happen. And then they put in their lot size, they put in their trade. In demo, it works in profit. In real life, it fails, and then they feel they are frustrated. They feel that like something is wrong. Have you cost yourself out? Am I cost? Nothing is working. Why am I not earning from this trading? Now, if this is all you are going to take home with, which is where I'm going to, this would not mean you changing any strategy you already have before now, because you need to know the truth about the market. And the same with life, but the market one is more serious because we are dealing with money, like you are seeing your money going like that. All right, but it's true about life also, but let me not go into that one. So, Jay, you are saying the market is uncertain. I agree. Win or loss is there. I agree. So how do traders stay here and be profitable in this quote unquote uncertain market? I have given the answer earlier on, but I'm going to make it a bit more clearer. Number one, which was the answer I gave earlier, you must have a disciplined base. You must have things you look out for. You must have a condition to trade, even though that condition will not negate the possibility of you losing that trade, but you must have a set of rules that you follow. And the very first rule I will present to you, which you already know, but I will subscribe and take it more serious this time around, is that for every time you trade, you must have a fixed risk to reward ratio. What does that mean? You can see a sample trade I did there. I took this trade on Friday, NFP, right? This past Friday, that's yesterday. Now, every of my trade must have a fixed risk to reward. This is, if you look at the middle of this box, you will see 4.05. If you can see that, 4.05. The target is about 280 pips. The risk is about 69 or 70 pips. That's a stop. For those of you that know what I'm talking about, please see what I'm saying. But to save our time, what I mean by a fixed risk to reward, and I will recommend, all right, because you can do 1:1. That means every time you are trading, you can risk $1 to gain $1. But I would not recommend that. The risk to reward that works for me, and I will sell and recommend for you, is at least 1:3. At least 1:3. Now, I gave the last two badge this drill exercise, and if you like, I'll submit to you also. And what's the exercise? Don't try to know anything about strategy. Don't try to trade. Okay, let me bring out. Okay, let me bring out something here. Don't try to know anything about strategy. Whether how will I buy or how will I sell? That's the question everybody's asking. But don't try to know where to buy or where to sell. Now, here's the exercise you may want to do. Write this somewhere. Okay, go to any time frame, any chart. Let's say 1 hour time frame, or even okay, let's do 1 minute time frame. I will not do that now. I'm giving you a challenge. I'm giving you an exercise, something that will help you change your thinking about this whole stuff. Excuse me, please. Please let me know if you can see my MT4, if you can see my trading view rather. Yes. Let me know if you can see. All right, thank you so much. All right, thank you. All right, thank you. So here's the exercise. Go to 1 minute time frame, any chart, right? Now, maybe 1 minute, 5 minutes, or whatever. Look for every time a green candle pin in a 1 minute chart, buy. And once you buy, don't target support resistance. Don't target support resistance. Okay, I'm spending too much time here. Every time a green candle paints, buy and put stop loss below the candle. Let's say we're here now. As this green, assume this is 1 minute chart. As it closes in green, just buy, put stop loss below it. Then target, if your distance of entry to stop loss is 2 pips, target 6 pips, that's 1 to 3. If your stop loss is 2 pips, put your take profit as 6 pips. Do you understand? If your stop loss is 3 pips, put your take profit as 9 pips. Every time a black or red candle shows, sell, put stop loss below that candle. If it's 2 pips, put your take profit as 6. If it's 3 pips, put your take profit as 9. Do that for 10 times. Come back with your results. Okay? No emotion. Don't calculate support resistance. Don't calculate is it bearish or bullish, because you will see that in every bearish movement, in every bearish trend, there is a bullish movement. In every bullish movement, there is a bearish, or in every bullish trend, there is a bearish movement. So don't calculate anything. Just do that now. It will change the way you see. You will now see that some of these things, we overcomplicate things and miss out on the main thing. The main thing is, if you have an edge or a strategy that you know that is working, that has mathematical data or backup, which is what we want to do for the next 20, 30 minutes, right? All you now need to do is look out for the conditions of that setup, take it without thinking, execute without thinking, set your SL, set your TP. One of the hardest things to come in terms with is that your profession as a trader is not determined, or it's not supposed to be determined by one single trade. It's supposed to be determined by a series of trades. Series of trades that you follow the same rule, not that you are taking 10 trades. The first 3, you use support resistance. The next 3, because they were SL. The next 3, you now use trend line. The next 2, you now enter smart money. The next 3, you now go to ICT. You will just confuse the whole thing, right? So that's a challenge. Now, again, I'm not going to do the job of what you are supposed to learn from, what's it called now? Trading in the zone and best losers win. Man, it's crazy. One of us, funny enough, I think one of us, I don't know if he's here, met me. Oh, somebody has even dropped the PDF. Thank you so much. Is it Abure? Thank you, sir, for that. Well, I don't know if anybody can download. Oh, okay. Thank you. Somebody has dropped it here. Abure has dropped it here. So if you can download that chat, good. If not, we'll also open the WhatsApp group and we'll drop the PDF there. You can print it out. If you are serious about trading, please print it out. Please take notes and follow through. That's all. My goal for this call, let me tell you ahead of time, I'm not going to sell any course to anybody here. You will not pay me 1 cent. I will not, at the end of this call, I will not tell you I'm opening no mentorship. The goal here, if you can pick what you are learning here, good and fine, nothing more. All right. And my goal again is not that after now, you will now be looking for multiple mentors. If you have been doing it for like 5-6 years, you have like 15 mentors, you've blocked like 8 or 9. Maybe I'll be the one you block next. Bro, if it's not working, it's because you're not doing something correctly. That's just it. And this is the hard and bitter truth. This is the hard and bitter truth. I read something on Twitter. Somebody said, have you been so frustrated in Forex that you blocked your mentor? I was just laughing. And somebody was like, I just blocked the way before coming online. So even though I know some guys are crazy out there, that's not my concern. But the truth is that if you do things right, you will get the right result. So 2 things I will leave you with before I move on. Number 1, risk to reward ratio. Okay, 3 things. Number 1, read those 2 materials. Number 2, risk to reward ratio is the holy grail. Risk management is the holy grail of trading. There are no 100% strategies anywhere. Risk to reward ratio is the holy grail of trading. Number 3. What's number 3 now? I would have said journal your trade, but it will still be everything and everything. So let's do TA. Let's do TA very quickly. Technical analysis. Now, I'm going to have a bonus. Like I said, I'll show us the right. It's basically the same thing we're going to do here. All right. So for most of you, you may be new to smart money concept, and I may not have the luxury of going to all the genesis. It's not really important. All right. Because there are more than 1,000 ways to trade the financial market. I'll say that again. There are more than 1,000 ways to trade the financial market. ICT, bless his heart, Michael, what's that other name? Michael, check him on YouTube. He did a lot and get some of these terms out here. But over the years, I found out that you don't have to be that precise to be a successful trader. You don't have to be that precise. But you can grow in confidence with time. Like I was saying with one of my inner circle guy, you can grow with confidence in some time that you can now know that sometimes I do 1 to 3 at base all the time. But there are some trades that you will just know this one. I will not risk 1, I will risk 3% of my account. Well, that comes with time. Like, for example, I was on a call on Friday, having this call on the morning with my guys, and I was telling them non-farm payroll, though it's crazy, but the market will do one of these things, right? And I was even asking them if any of them they can confirm. All right, we were here on that call as at the time we're having the call, and I was like, non-farm payroll will spike down and clear this liquidity here. All right, we already look at this. Non-farm payroll will spike down, clear this thing, and then buy up. And then I told them put a buy limit here, and non-farm payroll, boom, give, and this was a crazy ass trade, right? Now, let's go to TA. So I was trying to say that you can get some level of confidence with time, all right? And so let's get started. So what we are looking at is liquidity and structure. So how to trade the financial market. The first thing first is you need to understand market bias. You need to have an understanding of where price is going to, or a directional bias. I'm seeing some of my oldies here. Please, I know I can see you. I respect and regard, but please allow me to teach. And if you feel some of these things are repetition, please, you can exit so those who are trying to get in can join. All right, maybe you can join in later on if you still have space, because our 100 slot is completed. So I'll break down this lecture to 3 or 4. The first I have done, which is psychology, the real truth about the market, which I recommended those 2 books. Number 2 thing about trading is market direction. And the simplest way to know market direction, by market direction, is another word of saying market bias. You cannot successfully trade if you don't know the flow of the river. Well, you can be a counter trend trader. So let me be a bit picky with my words. You can be a counter trend trader. So you can be, what does that mean? That means if the river is flowing up and you know it is flowing up, all you just want to look for is just pull back and trade. And then it goes up, you wait, it pulls back. So you can be a counter trend trader. But the best and easiest way to trade, all right, is to flow with the trend. So you hear the popular word, the trend is your, someone should complete that for me. The trend is your, complete that for me. Let me know if you are following or you are watching football and leaving me here. The trend is your friend. Thank you. All right. Thank you, sir. Everyone got that. Okay, so let's go. So the first thing you want to know is directional bias. And how do you know directional bias? Very simple. First of all, you have to determine what kind of trader you are. You want to be. Do you want to be a swing trader, a day trader, or a scalper? Because you are going to use different time frame to get your directional bias. If I'm going to be a swing trader, that means I can hold trade for days, weeks. Then I want to look at the monthly or weekly time frame to determine my trend. If I'm going to be a day trader, my daily time frame, my H4 time frame or 4-hour time frame is okay, is enough. If I want to be a scalper, I just want to quick in and quick out. My 1-hour time frame, 30 minutes time frame is enough to get a directional bias. All right. So another errors people make is that some people they want to analyze it. Some people do top the analysis for you. You may get confused. We start from monthly and it will end in 1 minute. It's crazy. You will refine and refine and refine. You might run mad. Sorry for that word, but you get the point, right? So what kind of trader you are? So for the sake of this call, we will be a day trader. So we'll do stuff with the daily time frame or the H4 time frame. So because of that, let's quickly go to the daily time frame. This is the daily time frame, D on gold. I'm going to clear this chart as I would every of my charts, so we'll learn afresh. Now, when you go to the daily time frame, what are you looking at for? I want to know. I already gave an apology before we started. My trading view subscription expired earlier today. My bad. I would have loved to do a replay too, but I may schedule another call for that. But this class will suffice. Trust me. Now, what do you do in the trading time in the daily time frame, for example? You want to determine the direction, because again, let me give us an overview of what we are looking at. I should give us a board. Let me give us a board. Sorry, please. A moment. Picking it well. So the first thing we want to look at, for which we have done, psychology. And I've given us what to do with that, right? Excuse me. The number 2 is bias. Understand market bias. Number 3 is trade the bias. And number 4, back to psychology, which I will also in this case call risk management. So these are all we want to look at for the next. Can we do this in the next 30 minutes? Let's try. So this is your time, this is your template. This is your template. Before I trade, you consider, am I here to revenge trade, to make money? Now, how you know you are wrong already before you even start trading is when your action is prompted by greed or fear. These are the 2 strong emotions of traders, of humans generally, greed and fear. So am I entering the market with greed in my head to get a car tomorrow? So I'm going to over risk. Or am I coming with fear? I have lost $1,000 yesterday. I'm not going to be careful now so that I will not risk, instead of risking 1% of my account, which should be $10, I want to risk 2 cents. So I'm coming with fear. Once your trade is characterized by any of these precursor, any of these emotion, then that is a no-no. It's a red flag. You shouldn't be trading at that time. Number 2, bias, which is where we are at the moment, bias. So we said if you are a day trader, you come to the daily time frame. What do you do in a daily time frame to determine the bias? Because you want to know the flow of the river so you can flow with it. So what do you do here? You want to know the market structure. All right. And there are things you need to know. Please, I'm going to delete these things. So please note them in your whatever. I'll be referring to them. I have to delete them to clear my screen. Now, when you come to the daily time frame, you want to look at market structure, which is Forex 101, right? That basic thing is still what you are going to be trading. Okay. Clearly, gold is bullish. Now, there are certain things as a smart money concept trader that you need to know. And I will just explain it quickly, because we are going to use them also even when you want to trade the bias. The first is a 3-in-1 precursory measure, which we call equilibrium, premium, and discount. Very simple concept. Equilibrium, premium, and discount. It just simply states that when you are where is my, excuse me, please. I don't know why I cannot find my, okay. So, well, that shouldn't take my time. Now, equilibrium simply means midpoint, midpoint. Premium means top half, where you sell from. Discount means bottom half, where you buy from. So assume this range with me. I just brought out a Fibonacci retracement tool. Now, to set your Fibonacci, you just need to go to your setting and simply uncheck every value and leave only 0, 1, and 0.5. Leave only 0, 1, and 0.5. Now, when you leave out those three values, this is what you're going to have: 0, 50%, 100%, whichever way. The top half of this equilibrium of this fib tool is your premium. Top is premium. You look to sell. Once price comes to premium, it always seeks to sell, ideally. Once price comes to the bottom half, which is discount, it always seeks to buy. So you seek to buy at discount and sell at premium, always. I will put this in context as we put everything together. The midpoint is equilibrium, where price settles. It's like where you have your consolidation, is your equilibrium. You understand? So what this tells me is that ideally, please note my use of language, ideally, where is this? Okay, path. Ideally, in an uptrend, right? This pullback in an uptrend should pull back to the discount of this range low to this high. So if I put a Fibonacci 2 from this low to this high, the midpoint should be around here, right? So that means anything below that midpoint should be my discount, and everything above it is my premium. So, but because I am bullish, price should go below that within the equilibrium into discount and buy from there to the upside. And it should continue like this. Now, usually, if price does not get, in this case, now this should be my equilibrium, discount should be at the bottom. Usually, if price do not get to the discount before it buys, that leads to fake out. So something like, something like this, price will buy from that wrong area and then come back, take out this liquidity into discount and buy. All right. So that's what leads to inducement liquidity and everything, which we are going to learn eventually. Do you understand? So equilibrium, premium, and discount is a very simple concept you need to understand. The other thing you need to understand, or three other things you need to understand. Number one is fair value gap. Fair value gap. Fair value gaps are spaces that exist between candlesticks. Spaces, if I'm too fast, let me know. Nobody said anything. Hope you guys are following, or am I muted? Okay, give me an F to let me know you are following, please. I'm just rushing through these basics. Give me an F to let me know you are following. All right, thank you. I just need one person to follow and I will run. Just one person. Thank you, Sas. And man, if there's a woman here. Please, if you're a lady here, let me know that you're a lady. Because women don't like mathematics. So most of them don't like mathematics. So they don't do Forex like that. So if I see a woman that trades Forex, I respect you. All right, so we have this here. Thank you so much. I can see all your response. I'm not looking at chart at the moment. So fair value gap is the next thing we're looking at. Fair value gap is you can also call it market imbalance. All right, it can also be called market imbalance. Excuse me. Okay. It's actually the space that exists. That is something I'm looking at. I want to permanent my tool. But it seems that's going to take my time. So look at this candle. Right? Seems someone's trying to help. Oh, I'm a lady, Augustina. Welcome. Good to have you here. All right, so fair value gap is the space that exists between candles. Now, this what I'm explaining works everywhere, whether 1 minute, 1 month time frame. What by space, what do I mean? Please look, I'm not able to annotate it very well. Look at this candle I'm pointing at. The candle before it has a high there. and the candle after it has the low here. Your sound is getting faint. Please, who else can not hear me? I'm trying to project as much as I can. Am I loud enough, please? Am I loud enough, please? Someone say my sound is getting faint. Please, I don't want to miss what I'm trying to explain. Better now. Thank you, sir. All right, so I'll try to project. So this gap that existed between that low, sorry, that high and this low, this is what we refer to as a fair value gap. It usually happens within a candle of threes, but sometimes complex ones can, like this case, that is a complex fair value gap. This is an outside bar, but it usually happens within a candle of three. All right. So you will see that in this case now, what the algorithm that controls price action is already noting now that this particular green candle, at this place where nothing touches it here, it's only bought through. It's only buyers that are in control here, no sellers here. So this is an imbalance. Ideally, the market should go up and down, up and down, up and down. But when it goes one side, right, I still will call this one a BC or a CB, all right? Buy imbalance, sellers inefficiency. Well, let's not bother about that. Now, fair value gap or market imbalances, they serve or act like magnets to price. That means they attract price. Every imbalances should be, should be filled, all right, or should be balanced. Now, where people miss it is that you expect that if this is the case for imbalance, that we see a candle that no buy, no sell, just this is an imbalance, for example, or a fair value gap. So that's the thing that because we say every fair value gap must be filled, price would have to come and close it and know. By saying every imbalance has to be filled, most times the three layers of that imbalance is what needs to be filled. So if price only returns by three layers, I mean the start of this imbalance, which is that top, the midpoint, and the last point. All right. Any of this area is sensitive. So price can just come back and tip the beginning of the imbalance and then go. It will be regarded as filled. The algorithm will regard it as the imbalance have been interacted with. All right, we may see some examples. But this case now, I'm showing you, for example, this is an imbalance in this with respect to this green candle here. Now, after this green candle, there's a smaller one here. When this one was painted, notice the high of the one before it, which is that one. So this small one was painted. Then the next day candle came, which is this green candle, came back, and notice the low of that candle interacted with the high of the previous candle through the body of the middle candle. So there's no imbalance in this candle. No imbalance. Let's look at the next one. This is the next one. This next candle is big volume candle. The candle before it painted a high there. The candle after it painted a low here. Is there imbalance there? Yes. This area is the imbalance. So what will price do? Price will seek to fill it or rebalance it. So for like 3 days after this imbalance was created, 1, 2, 3, price came back, sold to rebalance this imbalance. This thing I'm telling you, if you understand it in itself, you will be good, because in understanding market direction, many times, all you need to know is that is there an imbalance in price? Because you are going to learn as we move on that price is moving up or coming down to do either to rebalance an imbalance or to take out a liquidity, which we will learn the next. In fact, what we see happen for gold on Friday was an imbalance that price came to balance. Let me show you that so you can see this thing happened. It happens all the time. Let me zoom in. Now, in your mind, assume you did not know this was going to happen on Friday. Just cut off this candle out from your mind, okay? And then see with me. This was Thursday's candle. This was Wednesday's candle. I can see Thursday's candle went above the high of Wednesday's candle, and it ended this way. Now, why did Friday's candle open here, come down to interact with the Wednesday's high or body through Thursdays before it went back up. Because as at Thursday, this is all you had. And this, I'm telling you, happens everywhere. If you try to go to daily time, you will love it, because many times you don't need to know where price is going to go to, like to catch 1,000 pips move. You just need to know that, okay, I know price is going to go to the upside, but how far will it come to the downside before it expands? All you need to trade many times just one candlestick from the daily or weekly time frame. I don't need to know from the daily perspective, will the next day's candle be expanding to the upside or expanding to the downside? That's all I need to know. And then I will form, well, we'll put these things together. I hope you are following so far. So let's not get ahead of ourselves. Let me take us back to the example. We'll come back to gold, and probably that's what we'll wrap up with. So you can see again the fair value gap. Why I'm taking my time here, because all you're going to do in next step will just be putting everything together. You see how easy this thing is. So imbalance was rebalanced here, and the price pushed up. Every time you see a big volume candle, there is most likely an imbalance there. That price will most likely come and balance. For example, look at this tip. You can see this black candle here. There is an imbalance there, like this. There is every high degree tendency that this current price push that gold is doing is going to go there to balance. So this automatically will form my bias. For example, look at this one here. Let me show you this. Look at this one at the bottom. This is not straight too. But you will agree with me. You will agree with me that this high here somehow is going to interact with this low. Why? Because when this black candle was painted, there was an imbalance here between this high and that low. So price came back, did not fill it completely, filled to the midpoint, and then sold off. Came back again, completely filled it, and now sold off even more. Are you see? So from this place where price was buying, if you have spotted that imbalance there, would you not be looking for buy to that level? And this is so powerful, my friend. This is so powerful. I'm not even bluffing. These are the little moving parts of price action. Little moving parts of price action. All right? But this is not all of it. Like again, moving parts. Sorry, I'm trying to look at. We can't hear you, sir. Poor audio. What's happening to my audio? What's happening to my audio? Hold on. Let me mute. Let me mute and come back. All right, so please just try to give me updates from your end so I can keep track and I can project. Hope it's better now. Okay, someone says fluctuate. Please don't fluctuate. I'm putting all. The audio is okay. I can hear you, not you, sir. Thank you. Because I can see my mic. This one is asking for. Samuel said, anytime I ask whether it's okay, the thing will not be okay. So is the audio monitoring our activity here? That's crazy. But no problem. I will try to. I'm watching you at your comments, right? Thank you. Thank you. So I was saying that if you know price was coming to this fair value and you are here, wouldn't you be buying even before it goes up there? Look at this fair value here, this one. So you can even be looking for buys to this fair value. There's another one here, and then this one here. Good buys. Then when price was reversing to the upside, there was a fair value gap here. Here, this one. And that can be your. Now, I don't want you to take everything I'm teaching, okay? You can just take one, all right? Study, and may give some of you the replay, okay? Yeah, don't want to promise here. But then, that's for fair value. We'll come back to it. So you must understand that concept very well. Market imbalance. Now, the next thing you need to understand, of course, order block is very simple. So do I need to talk about order block? Order blocks are candle, or is a candle or candles that leads to big moves. By big moves, let me say that again and slowly so. An order block is a candle or candles that leads to big moves in the market. And by big move, we mean moves that lead to the break of market structure. Moves that leads to break of market structure. So anytime you see a candle that breaks, like this push all the way down, that breaks market structure, look at the very last candle that sponsored the move. The last candle or candles, so it can be one or several, all right? Candle or candles that sponsors that move. You can have bearish order blocks, you can have bullish order block. So the way order blocks are designed to work, they're designed to work like support resistance, such that if, like in this case now, this green candle sends price lower. So if price comes back to it, price should go even lower. So let's assume that's an order block that sponsored this move. So if price pulls back to that order block area, it should go even lower. So they act like a support or a resistance. Very simple. We're not trading order block. I'm just explaining. Finally, to God be the glory. The last concept I'll talk about is liquidity concept. Liquidity. Very simple. Liquidity is money. Liquidity can simply be every swing high or swing low in the market is a liquidity. What do you mean by swing high? Swing high is a candlestick that has a high or that is higher than two candles to his left and to his right. So when you have a series of three candles and then one pops up higher than the one to the left and to the right, that is swing high. Right. So every swing high or swing low is a liquidity. This green candle here is a swing low. It has a low that is lower than a candle by the left and of course by the right. This candle here is a swing low. Why? Its low is lower than this one by the right, and this by the left. So you can just be taking out every like this, like don't have to think twice, just be picking them like this. All of these are swing. This is swing low, this is swing low, this is swing low, that is a swing high, this is a swing high, this is a swing high, bottom swing low, just like that. So every swing high or swing low is liquidity. Now, to push it further, every individual candle in itself is a liquidity pool. I'll say that again. Individual candles in itself is a liquidity pool. So most of you know how every candle paints. Let me just give you a general knowledge on that. How does candle paint? How is a green candle formed, or a red candle? How are they formed? A green candle is formed when it closes higher than the open position. So this candle is opening at this level. If it wants to be green or up close candle, it will first of all go down to create a low, and then to go up to create a high, and then it closes. So you call every green candle an OLHC. This is not correct. Opens low, high, it comes down and closes there. So the closure is higher than the open. So every green candle has a higher close than the open. Well, this may not be for, is it too advanced? We're not there yet, you shouldn't be advanced. I'm feeling I'm rolling over some person's head right now. One more time. Every green candle opens at a point, it creates the low, goes up to create a high, then pulls back slightly from the high and closes. Check every green candle, that's what it does. This green candle on Friday opened there, came down to create a low, went up, create a high, then pulled back and closed below the high. So every green candle has a open, low, high, close in that format. So you see that OLHC, that's for bull candle, OLHC. Every red candle does the opposite. Every red candle does the opposite. And by opposite, we mean your red candles will close lower than the open. So red candles will open, go up to create a high, comes down to create a low, That's why it's bearish or red. Then goes up and close. It will close there, open here, create a high there, and create a low here. So every bearish candle has an O, H, L, C. O, H for high, L, C. Green candle has O, L, H, C. So just alternate it. Don't bother. If you don't understand that one, don't bother. My point is that, because I'm behind time, my point is that individual candles are liquidity because every candle has a high. Remember we said swing high, swing lows, they are liquidity. Every candle has a high, has a low. All right. So every high of a candle or low of a candle is a liquidity. And it gets very powerful, especially when you look at this or look at candles from the higher time frame. Remember, we are still framing bias. And that is why, look at this chart, for example. That is why you see gold price came up, took out this high, or you can see took out that liquidity and sold off. Why? People were selling from this high and they were making money. Price pulled back, took out their stop loss, and then sold even lower. Do you see that? Look at this series of lows. Look at this low here. So price took out a high, was selling, then came and took out this swing low, and all of a sudden it starts having a buy momentum. Can you see what I'm showing? Look at this low here. Why did gold sell all these days only for it to take out this liquidity and started buying to the upside? They have collected money here. So in the market, it's either you are trading from liquidity to liquidity or you are providing liquidity for other traders. I'll say that again. It's either you are trading liquidity or you are the liquidity, where based on the market, truth of the market, at every time or at one time or the other, you and I will always be liquidity. So when you are liquidity, take it in good faith. But when you are aiming other people's liquidity, making other people lose money by you profiting, take it very well. So one of the things I tell myself as a trader is when I am losing, or I'm in a loose trade, for example, why will I be anxious? Why will I be calm to allow this trade go over 100 pips in loss for me, for example, and I am in a trade that is profiting? I am 20 pips to profit. I am now anxious enough to close it. Why? I'm cheating myself, yo. If I'm in loss, I can allow 100 pips allowance. Why can I not allow 100 pips take profit target for myself? Are you see the twist of these things? Good. So at this junction, let me know you have followed to this point because we're moving to the next part. Give me an F to let me know you have followed to this point. Give me an F to let me know you have followed till this point so I can move on. All right, good. Thank you. So we have said, to summarize the first part, you must understand market bias. And how you understand market bias, I started explaining some basic things you must know. Equilibrium, premium, discount, fair value gap, liquidity, order block, right? Now, why did I take my time to go through all of this? Because you will need them if you are going to subscribe to our method, all right? Now, to move on, to summarize bias, price action or price moves, and please write this somewhere if you are taking notes. Price action or the movement of candlesticks you see in the market, it moves to do two things. It moves to do two things only. Price action, I know you have heard a lot of things, but please, for the love of God, don't use the name of Lord in vain. For the love of this class that you paid your time to be here, please pay attention to what I'm saying. It's when you have back test and you disprove these things, then you can say, okay, you can throw it to the trash. But please listen carefully. Price action moves to do two things. One, to fill a liquidity, to fill a fair value gap, or to balance an imbalance, or to take out a liquidity. Every push up or push down of the candlestick that you see in any time frame is either it is going up to fill or rebalance an imbalance, or is going up to take out a liquidity, no more, no less. Or it is coming down to rebalance an imbalance, or coming down to take out a liquidity. Sometimes, or most times, it goes up or down to do both of them. Now look at this example I showed you. Now, would you also agree that apart from price coming down in gold to take out this liquidity, can you also see a fair value gap in that last candle, this green candle? The gap exists from that level to this level. So it came down, take out that liquidity, fine, but it came inside, even past the midpoint of that imbalance. Then it had enough, it has met its objective. Now it's going up. Now that it's going up, what is going up to do? We have said it already. This one that came up first has already balanced this rebalance. So there's nothing, no rebalance here again, or no fair value gap here again. The one that is up here is liquidity, those highs. So gold is going up to take out this liquidity. If it takes that liquidity, it may pull back to do something else, maybe to fill an imbalance that might have been created here, or take out a liquidity that might be here, anything. But after it takes that liquidity, expects some form of pullback, then goes up. Ultimately, because we are bullish, can tell you ultimately gold is coming for that liquidity. Even though when it comes to that up imbalance, it might have some bearish movement. So all I need to just know when I look at my chart, first of all, determine the market direction based on structure. Can I see higher high, higher low, and all of those good stuff you know already about structure? Don't expect to teach you higher high, higher low. If I see that, good. So what is price doing immediately? The immediate price movement. From this chart, you can clearly see immediately price, you can see are taking out this liquidity, which you can call internal range liquidity. And usually once price takes out internal, that's another thing entirely. I don't want to confuse you. If it takes internal range, it should be coming back to take out that external. All right. So it has taken this liquidity, it has expanded. Okay. What else? It pulled back, came back to grab another internal here. Now it's going back up. So my bias is telling me, hey, look for buy. Don't think of selling gold right now until they take that liquidity out. And that's why I was looking for buy on Friday. And then once this one is achieved, I cannot be looking for the next. So simple. How do you determine your bias? Know your market structure, number one. Number two, start looking out for the immediate price move. We'll look at other examples. Let's go to the next thing. Now, let's assume you have known your bias. I have known that price is going to come to this upside, or is going to move to any of this liquidity we can see to the top. What do I do next? What do I do next? Simple. Number 3 point, trade the bias. Trade the bias. So once I see this is happening in my daily time frame, you simply go to the last or a smaller time frame and look for a reason to join the trend of that bias. Don't go against it. Trust your analysis. If it fails, it fails. Remember what we said from the beginning, win and loss, but don't go against your bias. Trust it. Trust it. All right. Now, how do you trade your bias? I'll give you a very strong entry confirmation. See, I won't lie to you all. This is 9 o'clock already. I can stay here till whatever time. There are a lot, obviously, I can share. But I am making this something that's in my heart, that if this is all you have and do back testing, it will be sufficient enough to make your first $1,000 withdrawal from Forex this year. That can be a goal for you. And I also will see how I can tell you about a prop firm that gives live accounts. It's not me, don't give me money. Buy, use what we are teaching. Come to our Signal platform, trade, make money. Get that goal first. If all this class will do for you is to debunk it that people do not make it from Forex. Somebody was showing me how he made $300. He made $300 within 2 weeks with our Signal. He's not even a student too. Now somebody else will say, you $300. That's almost like 500K, $500,000 in Nigeria or more. I'm in haste, so please forgive my English blunder, right? That's some money within 2 weeks, like 600,000 naira. He made it trading Forex, all right? And then somebody else will say, oh, mom, now why you those guys they do? There's nothing like that there. I was telling somebody, if you believe things are fake, they'll be fake to you. Even the Bible says, to him who is pure, all things are pure. So if you believe that people do not make it here, please don't waste your time, exit. There are other things you can do. I'm also into real estate. I can teach you real estate. I'll go and all my mentor will say, go and do something else with your time. All right. So it's your belief system. So if all this can do for you to, for the end of 2025, make you get $1,000. Like I say, okay, 2025, I gained $1,000 from Forex. So when the dark days come, you remind yourself that this is not a scam. You can profit from here. All right. I'll be satisfied. 100% free class. Let's go on. So how do you trade your bias? You trade your bias by having a simple pattern. It's not really a pattern. It's a logic chart, but you can put the logic in a pattern. All right. So two things I'll show you. If you are bullish, write this down. This is your entry, and we have a YouTube channel. We have all of this in our YouTube channel, so it's all there. I'm just repeating. We'll just go back to the front pattern, leave this place. Now, if you are bullish, what you want to see in the 15 minutes time frame is you want to see, fine, you are bullish, right? So you want to buy. You want to buy. That's not to be by bullish. What you want to see is a sweep of liquidity, a break of structure, an inducement liquidity, another break of structure. The price comes back to take this inducement liquidity. You are buying from there. So all you want to see is a sweep of liquidity, a break of structure to that area. The price pulls back to form an inducement liquidity, then goes up again to break the structure the second time. So you want to see a two break. Let me use B. Sorry, I'm not on my best tools, right? So forgive my drawings. So this is your break of structure one, break of structure two. Then you simply put a buy limit here. Put your buy limit here, or you buy once price takes that one out. You don't wait for anything. If your buyer tells you you are bullish, this is all you need to wait for, my friend. Somebody will say it's so simple. Wait till I will show you. This is exactly what happened here on Friday in gold. Very simple. So wait for this break. You buy at that level. You put your stop loss here. Your stop loss must be placed. Please listen carefully. Your stop loss must be put in a place where if price takes it out, your trade idea is cancelled. Thank you so much. I've made money with it. In fact, don't look for any test. Thank you so much, Tunes. This is one of my guy. Yeah, Samuel White, 2K per month. Super, super possible. 20K per month. Super possible. I ain't there yet, right? I don't do 20K, but it's possible. My doings is not your doings, right? But collectively, for accounts that I trade, of course, but I'm talking of personal achievements, right? So, thank you, Tunes. And I have some guys who are here also. I've seen some guys. I don't want to acknowledge, but if I start going to acknowledgement now, I may not move on. All right. So you have this structure. Please take it down. The other one, so but you see this one has to do with a sweep of liquidity, a break of structure, then an inducement liquidity, another break, and price come back to take this one. This is what we call an A+ setup. A+ setup. It can happen in another way that price sweep. I don't want to give you two things. This class now one I won't give you now. It's one. A sweep of liquidity, a break of structure, an inducement liquidity. This one, this second one I'm drawing now, does not or did not break structure two times. You just have your sweep, your break, then inducement liquidity. This is not take out to form your second break. Price come back, take it out, you are still buying from there. Now, I will give you a context when this is most likely not going to work. Number one, and I do tell myself, before you click any trade, remind yourself, don't look out for reasons why look out for reasons why it may not work. That's another thing. So instead of looking out for why this trade has to work, this is what you know. Look out for the other side. Why would this thing not work? Now, number one reason why this setup may not work, I need to draw it out for you. I'm not liking this diagram I just painted. Now, one reason why this may not work over time is wrong bias. Number one, you are the wrong bias. Price is bearish. You want to look for bull movement in a bearish market. Number two, you are looking for, even though price is bullish, You want to buy at premium. You are buying at the top. And from the beginning, we said you only buy at discounts. You don't buy at premium. I will show you. That's number two. Number one, again, you are against the trend. Number two, even though you are in the right trend, you want to buy at premium. You will, even though the setup may present itself, it may fail. Then number three, which I want to really emphasize, I cannot see, then I'm struggling. If you can note here. Just give me 1 minute. Let me see if I can. I've seen it. Woo! All right. So number three, why this may not work is when, and listen, let me draw the pattern again. It this low sweeps this one, and then breaks this structure, pulls back, forms an inducement, breaks structure, comes back. You're buying from this level. So if you didn't have it correctly before, please have it correctly now, because after now I'm closing church, or I'm closing the class. Tomorrow is Sunday. The second one, we said you have a sweep, break, pull back. Now this does not break the second time, but comes back, buy from this inducement liquidity to the upside. Remember, whatever you are risking for your stop loss must be 3 times your take profit. Remember what we said, risk management. So your stop loss has to be below this sweep of liquidity. All right. And whatever pips it gives you, for example, this is about 66 pips stop loss. Your TP has to be at least 3 times. All right. Overall TP can be 3 times. But please note your first TP, whether 3 times or not. Okay, let me mark this. You are buying from that low. So let me adjust this. You're buying there. Your stop loss ends there. And therefore, your TP is 3 arrow. 3 arrow, good. Or, excuse me. Okay. So you're buying from this level. So price pool, your overall TP ought to be that high where price is coming from. This, because when price came down, this when you bought, your buy limit got triggered here. Your overall TP should be there. All right. Or if it's not there, target 3 arrow. If I got 3 arrow, like in this case, 3 arrow was before that area, good and fine, close the trade. All right. But there are times you know that this thing is swing, can even go very high. But that's all you need. That's all you need. The same thing for this one. You have to spend time doing this, but let me show emphasis sake. A sweep of liquidity, a break of structure. Remember, I'm giving us 3 things or reasons why this thing may not work. And I'm going to tell you the third one. And please pay attention. If you have written the first 2, good for you. If you have not written them before, so you can take your TP here. Right? Take your TP there. So you buy here. Stop loss goes below that sweep, because this sweep, the power of this sweep of liquidity is that the sweep of liquidity tells you that this low is protected. I'll say that again. Your sweep of liquidity that forms the base of your entry gives you a protected low. So price will hardly, if price breaks this low, that means price is not ready to buy it. Or it's just that one of those days where price actually is doing its thing. It just want to weak you out. All right. So target your 3 arrow. This is all you need. See, screen grab this thing. Now, let me give you 3 things again that will make this not work. Number 1, you are counter trending. Even at that, there is a way to do it. Number 2, you are looking to buy at premium. And number 3, please pay attention to number 3. Number 3, your inducement liquidity, which is where you want to buy from, is happening at the top, not at discount. Don't let it go over your head. So you have, take note of this one I drew here and this one I want to draw now. You have a sweep, you have a break. Now you have this inducement there. You have this. Now you have price action come this way. You say, this thing did not work. Can you see the difference between this one and this one? The inducement here is at the top. If you see this thing 10 times, it's going to fail like 6 or 7 times because your inducement is at the top. But if you see these ones 10 times, it's going to work at least 5 times because you have your inducement correctly. So please take this very seriously. Number one, know your bias. Number two, trade the bias. How do you trade the bias? Use simple liquidity entries that I just showed you from either the 1 hour time frame or the 15 minutes time frame as a day trader. If you have followed till this point, comment yes or why so I can know, because I want to show you examples right now. If you have followed till this point, give me a why or a yes. Can you write it down for us? Now me will write the rules down for you, bro. Okay? I am teaching. You should be taking notes. I should write it down for you. That's serious. All right, thank you. You have followed to this point. Good, good, good. Good. Boy, this is already 9:12. Okay, please give me an extra 15 minutes. Or let's say to 9:30, an extra 15, 18 minutes. Good. All right. Thank you, thank you, thank you, thank you. So this is so important, so important. Now, we already established that gold is bullish, right? Let's look at an example. Let's go to the 15-minute time frame. We'll look at multiple examples. Multiple examples. Now, let me say this before I continue. Your best entry, because there are times you're going to be seeing multiple liquidities, like you already have this as your symbol of trade, a sweep, a break, inducement. All right. You already know what I want to draw, but there are times you're going to see multiple inducements like this, right? Your best entry is always the last low before the main low. Your entry inducement is if you have like 50 lows. Your concern is that the last low before the main low is your best entry. The only reason I would want to consider anyone before that one is if the other ones are inside the discount also. That discounting is so important to my friend. So important. You will see it here. So important. Are there times where price may just come and keep going? Yes. 100% yes. That time price may not even send your liquidity entry. We just favor other people that are trading with other methods. You can tell you is a neutral market. It doesn't have to suit your this thing. But if it comes to play your game, you kill it. You make money from it. Right? So I have said there are times it may not. Thank you so much, Enoch. So somebody have done the job. And by the way, Mr. Enoch is one of our top guys in our room. Thank you, sir. I didn't know you were even, although I saw you earlier. So these are guys that are making wave with. All right, so let's look at this. Let's look at this. This is gold. We already said it's bullish from every indication. So quickly from what happened on Friday, you can see this low. Look at any low here. We can take any low here as a sweep. Let's use this one. Sweep of liquidity. And I want to take this external as my breakup structure. Now, what happened here, I didn't draw it, is that what you can see here, but sometimes you can have variation. So what happened there before we draw it is a sweep of liquidity. Now, before it goes to break structure, it creates multiple lows and then finally broke structure. All right. So price will now come back to take out any of those liquidity and buy. So I just gave you a third pattern if you paid attention, right? But it's essentially the same roots. And by roots, I mean a sweep of liquidity, a break of structure, an inducement liquidity, and price return back to inducement. That's all. That's all. Sometimes, or most times, I like having below my buy entries. Of course, if you invert it, you get the sell. But if I did not draw for sell, does not mean that it will only work for buy. I will draw for sell, right? I like having other blocks below my inducement or my entry, like other block around that area, so that if price finish taking that inducement, will bounce from the other block and it gives me an extra confluence. All right. So that most times, instead of putting my stop loss at this low, for example, I'll put it below the other block. In other examples, not this particular one, because this one just shows you what. So you have your sweep, you have your break. All right. Now, before the break, you can see we have, like I said, multiple lows. You have this one, it played, you have this one, and then price break. Then you finally have this one, and then this thing. All right. Now, what I want you to see is that from this low to this break of liquidity, for example, or break of structure, my concern are the liquidities that are inside this can. Remember, I taught you how to check FIB2. Aha, Jay is just adding something now. Well, I told you how to set your FIB2 from the beginning. So from this sweep of liquidity to the break of structure, I just put a FIB2 to mark the range. And I'm doing that so I can know the area to focus on to buy. I want to buy at discount. I want to buy at discount. So when I drew this, I got this area as my midpoint. I just put a line around it. And so therefore, every liquidity below this 50% is my liquidity of interest. It can be 3 here. I can, in this case, we just have 1 here. They are relatively equal. So this becomes my liquidity of interest. All right. You can be as precise as this, but you don't need it. Basically, there are many things I can say and talk here now. You will now look to roll over your head. But I want to see this thing is actually simple. So you see this liquidity here, this relatively equal low. Price had to come back. Now again, there are times price will just play and go without touching it. Fine, it's good. It's a missed trade. Nobody have to die. But you see, on this particular day, took the liquidity out. Look at this last green of other block candle, bounced it, and boom. I took this trade on Friday, exited around that area, and it was crazy. Other block or OB, yeah. I don't know who that person is replying to. So this is an example using this structure. All right. Now this let's scroll back a little bit and see. Look if you can see other example. All I want to see now in this bullish market is a sweep and a break and an inducement and a return back to that inducement. How many of you will agree with me that this is another setup? Okay, don't agree with me yet, so just wait. A sweep, this low swept this one, and a break. Nice. Would you agree that if I go to 5 minutes or 3 minutes time frame, this would be an inducement liquidity? This area I just marked out, this is a low. Let me go. Let's see. This 3 minutes time frame. This was the Friday zone. Okay, it was the Friday zone. Very clean. This 3 minutes time frame. How precise. Boom, boom, boom. 200 pips move or more. Look at the one I'm drawing, I'm looking at right now. In case you argue, a sweep, you can even take this one as a sweep safe. In 3 minutes, you get it more detailed. Sweep, you can call this your break. From 3 minutes, this is your break. And then this is more like an inducement liquidity here. You can see you can get more precise as you go lower. But I don't go lower than 5 minutes unless I want to scalp, then I do 1 minute. But from 15 minutes where we're coming from, this is your inducement liquidity. 3 minutes, you have it here, right? So you have this low. So this low already is locked by being a sweep and a break. So just like we said, you expect price to come back to take out the inducement liquidity, which it did here. Boom. So let's go back. I just came to solar time frame to show you that you have an inducement liquidity there. So you can have it. You can buy there. Your stop loss goes below. Ideally, your stop loss should go below this low where you have your sweep. But because I have an order block, black candle right there, with experience, I already know that price should not violate my order block. So I can reduce my stop loss. So putting it there, I put it below that black candle. And then target where price is falling from is the high you are targeting. So it's going to go back to that place at least. And this case gave us 3.2 risk to reward ratio. There. We didn't put for this one. Put there. Stop loss there. 3 arrow. This is the first high where price was selling from. So that's where you want to target 2.25. I think that's around the area I exited, and then 3 arrow was around there, about 195 pips move. Okay, in a scale of, I know we'll take what I want to do as I wrap up is to do fresh top-down analysis with one other pair, all right? But then in a scale of 1 to 10, 10 means very difficult, and 1 means it's okay, it's easy. How difficult or easy is this entry and this way to trade the market? With 10 means very difficult, and 1 to 5 means it's okay, it's something I can learn. Please vote. We're wrapping up. Vote on the comment section. Let's know how easy or difficult is this. Just give me a number. From 1 to 5 means it's okay, something you can learn. Okay, 9.9. I said 9.9. Why wouldn't you just put 10? No, 9.9. I didn't. You said 6. Okay. This was me. I said 1 to 10. You gave me 43. You are not serious. Yeah, you are. Some people are not serious. So. Oh, Augustina, my sister. My sister said 9. Maxwell said 10. Okay, it's all right. All of this is 7. Okay, so 0.1. Hey, look, you're not going to vote for you. I'll remove you. All right, so it's crazy. Now, for those who are still lost, I promise I'll give you a replay. Okay? I'll give everybody that is here a replay. Don't tell anybody I'll only give you a replay. I don't intend to give it out anyway. All right, so let's put it all together. By putting it all together, let's get a few more examples. Let me give you the sell side scenario. Then we will close it up. What's my time now? Oh my God. Oh my God, time is good. And by the way, if you have some question, Pastor Bethel, sir. Why are you intimidating us with your 0.000 points? It's all right, sir. Welcome. Good to have you around. So I just came to 30 minutes time frame to see. Let me show you. Now, for the sell side, it's the same thing. Just wait for a sweep, a break, an inducement, another break, price comes back, sell from there, and boom. That's all. The same thing for sell. All right? Wait for a sweep, a break, inducement, may not break the low, takes it out, sell. Finally, the one we just saw or witnessed with gold, a sweep before the break gives you inducement, then it breaks, comes back, sell. Why am I losing my numbers? Are people going to watch football match? Yeah. All right. People are getting tired. All right. So let's look at, let's see another example. Let's see another example of the entry. Let's see another example of the entry. Oh, that squish this thing. All right. So I want us to do another pair. GBP USD. GBP USD. You can do this anywhere, right? By the way, I had this expectation for GBP USD for non-farm payroll, but let me analyze for you. Let me give you at least something to take home for next week. For those of you that are in this call, this class is happening on the 11th of January 2025. 11th, so I don't know when you are watching this, 11th of January 2025. I would have deleted, can I clear all of these things? Clear all of these things. From the higher time frame perspective, GBP USD, let's do this one together, all right? This is weekly charts. So take this home with you for, I don't know when you're watching this, but you can fact check. Again, why I'm saying fact check like I haven't to prove to anybody. It doesn't have to go with what I say, but then there are some sentences that you will see that will make it okay. This one, the probability of it happening is very high. This is the weekly chart. So let's trade together for next week. So what do? I'm looking at the weekly chart of GBP USD, and I can see that this entire drop that happened all throughout 2021, 2022 created a range, and price The top half is our what? Premium, where price should sell from. So it's been bearish. It's been bearish, right? So price need to come to premium to continue the sell. All right. And now inside my bearish area or premium area, I just marked out, this is a weekly time frame, a powerful fair value order block that's allowed for this big move, of course, that led to a BOS reconstruction. Now, I can also see that before price interacted with this order block as at my time. What's happening to the bottom? Sorry, give me a minute. I want to pick a date here now. Okay. So price came here September 2024. But before it came there, it took out a liquidity, which you can call inducement liquidity. So a break of structure, inducement liquidity, price takes it out, interacted with order block. Now it is coming down. It has become so powerful enough that it's broken this one. So my ultimate bias for GU is bearish. We are coming to take out this low because price have come to premium. It should sell to this level, right? Now, with these already, I already have my bias. The question now is, now I have my bias. I want to trade the bias. Now, that's not mean that I will not now just be selling blindly because I only just got bias. The next thing is to what? Trade the bias. Since I am from the weekly time frame, the next time frame to go is your 4-hour time frame. If you do the daily, you go to 1 hour. If you do weekly, go to 4 hour. There's a way this thing works, so you don't just jump in time frame. Now, when I come to 4-hour time frame, because my bias is telling me this thing should sell till at least this bottom level, 1.03, is a whole lot of pips. So all I need to do is to look for, because I want to sell, I need to get the premium of the current range to sell from. All right. And how do you know the current range? You first of all try to identify where you can see a sweep of liquidity. The first I can see is up there. There, sweep of liquidity. Right? So I can mark this range that from this high there to where price is currently at, this is a range. So that means I want to sell once price come to this area. Please pay attention. I want to sell when price come in, not at where it is at the moment. All right? And that's why you saw me mark that area. But then let's flow together. So I want to sell there. And only thing I can see there is another block. That's green candle. I just marked it out. But then nothing is happening. That's all I can see. Right? So I'm left with two options. One, either I wait for price to pull back to this place or anything around that area, of course, there are fair values here, before I sell, or I will wait for counter trend measures, something that makes me see price wants to buy. I will buy with price to that area. Counter trend, you can buy to that area, take profit. If it start giving you sell momentum, you sell from that area. I don't know if you understand the logic. Very easy. So what GU is doing now, fine, it's going to sell, but this is not where I want to sell from. I want to see price take out this liquidity. I want to see price take out this liquidity. Why should it take them out? We have seen they are both in discount. Our premium starts around this area. All right. So for this new week or next week, which would be I may be looking for a counter trend buy for GU. Because that. So then I can now go to say, okay, 30 minutes, for example, and look for reason. All right. In fact, I think short scalpers. Now look at this. I will clear the chart. I will clear the chart. Can you see also that if I come to 30 minutes time frame or smaller time frame, you can see we have a sweep of liquidity here, a break of structure here, and then you have your inducements. So what does it tell me? Instead of look for counter trend, if price can come here, I can get a little bit of sell to this area, to this low, and I'll be okay. But I will not be surprised to see price do this thing I showed you and push up to the higher time frame premium, which we say is somewhere around that area. However, if price comes here, I expect to see a sell. If every condition is met, sweep, break, inducement comes here, I should sell. In fact, I have sell limit stacked up here for next week, but I'm not expecting this sell to go all the way to that down part. I expect to scalp something out and then wash out what they will do. I expect them to bamboozle people, if there's a language like that, back to this upside. So what I simply did within a few minutes now was to, one, get a bias, two, analyze how I intend to trade bias. All right, so here's what I want to do. Here's what I want to ask. We're going to wrap this call. I will cut out this part from the recording before I even post it out. Apart from my students, all right, we already, before this call, gave a link for people to register an account with Okta FS, all right, and then deposit at least $20, and then be added to our signal room, and then trade with me for 3 months. Is it 1 month, 2 months, 3 months? Okay. So I'll make it one better. Some person already said they don't have, or they don't do Okta, probably where they stay. Somebody's in UK, everywhere, big Kenya, say they cannot create Okta first. So there's also an Exness link. Now, for the rest of January, every person that does that simple exercise of creating an account with our link, with exception to our students, all right, everyone that creates an account with our link or send a change of IB with our link or with my link that I posted in the group, for the rest of this month, we are going to be having live trading sessions together. I agree, one session will not be enough. All right. Usually this costs around $200-300 to do. Okay, but this is going to be free for, and it's going to be for just this month of January. In fact, we are starting from next week, so that you will learn precept and example, because there's a way you will trade counter trend. There is a way you will wait. So whether you want to be a scalper, there is a way you will see this thing and you will take it, or you will wait, and if it gets here. Now, by the way, it is not compulsory. All I have said, if you can get a premium trading view for test, which I'm not going to do tonight, time is behind me, right? You will see that this thing I just said applies everywhere. Look at another example. See, I'm not even looking for it too. I'm not looking for it, but it's everywhere. Look at the sweep. Okay. Look at a break here. Then this is an inducement. But you can see this inducement is low, but you can take it. If you take this inducement, right? This inducement was created, price did not come down. It took it out and sold off. Now, what even caught my attention is this other one here, this inducement here. Can you see that the recent sell-off happened after this inducement was taken out here? Boom! Then powerful sell-off. So it's no brainer that GU is going to buy either next week. You're going to see some buy, but will you participate? And that's the essence. And the call or the sessions will most likely be in the mornings, Tuesdays and Wednesday morning, just some 30 minutes session together. Then sometimes in the evening to teach and you ask questions. I can only take a few persons. I already said 20 persons, and that slot is almost completed. For the sake of this call, you should, now the condition is this, please don't come and ask me what I will do. Don't pay me money. Create an account with our link. Deposit at least $20 to show you are serious to trade, because I'll add it to our signal room. But much more than a signal room, you'll be with me live for the month of January. This is the only time I'm doing this for 2025, and God bears me witness. I won't even try it. I won't try it. You see the time and sacrifice we have taken. You paid sacrifice, I paid sacrifice to explain these things. All right. But again, it's not mandatory. So once after this call, I will post the link. For those who already have done that, I will create a group, and I will ask for you to come to me. Of course, you're already in the signal room. You will join that group and we'll take it up from there. My students, you are automatically in this platform already. I will open all groups and then you automatically participate. You don't have to do anything special. You have been with me through. Nothing is special, right? Now, the reason I'm doing this session is sponsored by Okta, all right? They sponsored it, so it's your free education. And that's the only thing. What about those who have joined? I just answered that question. So finally, let's do one analysis. Which pair do you want us to analyze? Which pair do you want us to analyze? The first, and I said I was going to show you derive. This works in derive. Talking about boom and crash. I don't see boom and crash. Derive. It's the same thing, though, my friend. It's the same thing. Let me see if I can pull that. I want someone to give me a currency pair, please. Okay, BTC is okay. No, it's fine. BTC is fine. Let's do BTC, please. Let's do BTC, Bitcoin, BTC, USDT, Binance. Let's take Binance. Let's trade Bitcoin. Daily time frame. And one of the things you're going to be learning, and I'm building as a course currently actually, is how to be a badass scalper. I found the money I made in December, I'm not going to lie. Money I made in December scalping because of the pin condition of the market. I didn't make it for 2 months in my own other accounts. Scalping can change your life. Well, it's for those who have the time and it's the same thing, though, but you just have to go smaller. So I'm doing daily, I do 15 minutes or 30 minutes to get bias. And then I go to 5 minutes or 1 minute. Actually go to 1 minute to get the entry. Within 3 candlestick moves, you've made money. Crazy return. Putting everything in perspective. So this is Bitcoin, daily time frame. So what can I see? I can see, of course, it's been bullish, right? It's bullish. Now, first thing I want to do is to look at any swing points at the bottom to the top. I can already tell you because of my experience that from this bottom to this top, already we see we are at premium of this range. We are premium. So because we are premium, I'm not looking to buy Bitcoin at the moment. I will only seek to buy Bitcoin once it comes below this area, once it comes into the 83,000. Now, it doesn't have to come here, all right? It doesn't have to come here, but at least this should be my sensible reason to buy Bitcoin at $83,000 into this range where you have this other block of 72,000, 60, whatever thousand. I don't expect it to come here though, but Pike can bring it. Liquidation will bring it and then to go. So this is why I say, so what do I expect? Because of this shape of what I see, I only be looking for sell. And where do I want to sell to? If I say here, that will be too very high, but you can see there is a liquidity there at premium. The potential or the probability that price will take out this liquidity, which is still at premium, sell to this point is very high as opposed to anything here. So this is my bias. Sell BTC to 85,000. But I haven't gotten this bias. Would I now sell blindly? No, you won't sell blindly. You now have to go to smaller time frame and break down. So go to 1 hour daily. So I go to 1 hour time frame. This is where my TP should be basically. So I look at the 1 hour time frame. I want to sell BTC. Where can I see a sweep and break? There's nothing here. All of these things are crap. I can only see a sweep and break that is a locked high at the top. And then all the any you can take any break. You can take any break. There are no hard and fast rule. So what I want to sell BTC, right? So from that swing to where price currently ends, this is a range. So that means I want to sell BTC at this anything in this area. I didn't teach us breaker block. That's a breaker block right there. But this is a liquidity that Bitcoin should push into. So this is already framing my sell scenario for me, right? You can target this immediate low. That's not 3R yet, or that one. Right. So whatever is happening here is a trap. If there is anything I will do at this point now is to buy. Do you get? So for scalpers, as I'm looking at this now, as a scalper who can scalp, the only thing I can do now is to buy BTC. But it will be a short-term buy to mitigate this high or any of these highs here. And you can see you can make a lot of money scalping. In fact, I may most likely look out for this trade after this call, and if I have a chance, also share that with us. All right. Why would I want to buy here? Let me show you. I can already see at the bottom, which is discount, there is a sweep, right? Even though I am bearish or I am short-term bearish, but if I see this structure locked in, so you can see a sweep, a break, right? Then an inducement. In fact, you could have even bought early enough if you had paid attention or if you know what if you had known this early enough. This drop inducement inside discount here. It dropped, pulled back, price came back to take it. So this is a first buy entry. This is a first buy entry actually. Scalp. Crazy. So I do not expect this low to be taken out again because it has taken out something. So I can just go to like 15 minutes time frame. If I want to scalp, okay, go to smaller time frame. Look for this sweep, break, this low here, this low before the main low. If price of BTC comes and take this low, I am buying. That's a very good person that brought BTC trade setup, or everybody, right? Look out for this stuff like this. Your SL covers that risk. You can target 3 arrow or that area, but it's a scalp, remember. It's a scalp. And I expect it to even go as high as taking out this one here, and even go as high as to that breaker block there. So it's quite a healthy risk to reward. So this is all I actually need. I need now, listen, once you do this drill on your own, you will find out that for every 10 times you will see something like this, I just draft for you. You're going to win at least 4, 5 times. Now, here's going to be the problem for most people as I summarize. The problem that we most people is that the time they will have the win, the trade that will be coming in their profit position, they will hurry and close. They will hurry and close for one to one. But the ones that will go against them, they will leave it for full margin. That's discipline. Again, back to what we talked about. So if I can risk 100 pips and lose it, and then the one that is going for me is less or going 100 pips, and I'm targeting 300 pips, why will I not wait and hold it? It's discipline problem, right? So that's for BTC. Let me see the question. Village people, you not pass like that too. For volatility, for VIX, I said it's the same thing, but let me just do one. Okay. Trading view derive. You know, these guys don't have, so I just do analysis from phone. You don't need laptop, but if you have a good big screen, better for you, good for you, right? Okay, I already promised as a bonus class, man, this is lengthy. Yeah, it's advanced. That's the right. Your own guy is a day. So the same thing, this is 24. This is daily time frame. V25. Okay, let's do with V25. Same thing. All right. Obviously, we are bullish, but let's see. Is there anything to the left? So V25 is bullish. Do you have any favorite derive apart from boom and crash? I don't do boom and crash, please. Don't come and meet me. Now, clearly from this derived chart, I can already see from the bottom. All I want to see first, what is the flow? Bullish, right? But will I be buying here? No, I won't be buying here. I'll be looking for reason to buy, right? From the bottom of this daily chart, I can see a sweep, a break, and all of this stuff. So buying right now is buying at a no man's land, all right? However, what would be a viable place to buy from, all right? This is another block. Actually, if price can come back, but that would be a big ask. So sometimes when once a pair you analyze does not give you what you want, move to the next one. I don't have to be stuck to V25 actually. The right. While we are looking at, let me show you the one I traded, jump 10. How will I find it now? Okay, jump 10. Jump 10, load for me. Good, 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 good. So jump 10, I am bearish on this body, right? Even it's a bullish, this is the daily time. Oh, okay, sorry. Okay, this is 1 hour time frame. Let's start with this. Oops, sorry. What now? I see what derive is doing to me. Derive, one thing about it, why you will love it, trade 24/7. So I trade derives during the weekend, basically, right? So from the daily time frame, you can see clearly that we are bullish, right? From the daily time frame. However, oops, I've not calculated my whatever. Sorry guys, I have to set this again. This will take my time because no matter how you set it, preset it, it will still come back. Okay, so we are bullish and currently we are at the discount. Good. I think we should analyze this one. And I'm out though, but let me show you. So from the daily, we have come to discount, we have bought. So meaning our next bus stop is that high. So jump 10 should jump to that place in a long term. So now you want to now look at the immediate push. And I love what I'm seeing, in fact. 1, 2, price came back for this internal liquidity. Push came back for this one again. So they've just been grabbing liquidity to the downside, right? And I expect jump 10 to take out this high, any of those highs, and overall, it should be going to that top side, all right? Because finally, having take out this liquidity, they are testing this, or they just tested that last order block, which is nice time for them to push up. However, I took a scalp sell because this trade, because when we were speaking, I said there are more than 1,000 ways to trade the market. So this trade up to this downside, the top is what? Premium. So I am licensed to sell there into something before the buy will happen. So it was that scalp sell that I capitalized. So go to 1 hour time frame. Let's look at what I capitalized on. Did I click this correctly? Yeah, I did. I'll take this out. So you already know that is premium. So at the premium area, you see this heavy drop. The price did whatever it's doing here. Where did I get? I think I got my entry here and TP here. So we do what the analysis is, like the long-term trade. I don't want this to be so lengthy, but I just want to show you my entry. Yeah. So already this order block has been used, and then And if you can see this, multiple entries. You can take this one. Let me get the precise one. 15 minutes, this 15 minutes, all right? Okay, here. So I took, once price took this liquidity, I was in on this and TP'd here. Boom. Right? Now, whatever is happening here, because we have already analyzed that this is going to push to the upside, if there's anything at all, is to wait for an inducement. I cannot use this one as an inducement to buy, even though they are creating it. No. Why? Why would this not work? Remember, we said if this is the inducement, it will not work because it's too far from your sweep. So they may most likely, if they like, take it out and then form another whatever for me. But then I just try to show you my entry. But back to 1 hour. So when I post this trade, or eventually this thing fails or works, you will know we analyzed it together. Was it 1 hour I was coming from? Yeah. Okay, good. So on the 1 hour time frame, we can clearly see we have a sweep here, a break here at the top. All right. So, and that's why I will not look to buy here, because if there's anything I want to do here is to sell, even though I know we are bullish. Why? Because at this, from this area to that top is a range. So you want price to come to discount before you buy. And where in discount will I buy from? This is a trade you all should look at. Just that trading derive. Like I will tell my guys jokingly in our mentorship group, put buy limits here. right? Stake your buy limit here. In any whatever, sell your car or sell your whatever, fund your derived account, put buy limit here. Full margin, TP here. As the trade gets triggered, go and price Lamborghini. Boy, I'm exhausted, but I hope you get the joke. Please, oh, please, oh. Boom. That's what we're looking at. Jump should sell to these areas. And please, one of the things I like doing, I like asking my guys to snap or screen grab, snap this whatever, and note it somewhere. This is jump 10. Snap it, save it, study it. All right. And you see how you grow from there. You can run an audio. You said on daily bias. Yes, I'm taking questions. I'm taking 3 questions. Sir, you said on daily bias for a buy, price will first of all go to sell side before buying. But please, how far will price go on the sell side before buying? Very good question, but you are asking me to repeat what I just said. This is a classic example of what you're talking about. Our bias is telling us to buy, but we cannot buy here. Why? Because we are currently, from this bottom to this top, we are currently at premium. So evaluate the range. Price must come to your discount before you buy. So price